Hi, this is Bob Iaccino coming from the CME Group trading floor talking S&P futures. Decent performance for the S&P today. I would not call this one unchanged. We were up between 0.25% most of the day, got a little bit of a rally after the jobs number, and the US data in general was good but not great today. Now, why would we get a rally out of that? Well, because it again takes the Fed almost completely out of the picture. At least that's what the CME Fed Watch tool is doing. You can look all the way to December and then in through the first 3 quarters of 2018, and not one Fed meeting, not one cycle has a rate hike priced in at any better than 37-38%. Again, that's the CME Fed Watch tool. So that's what the market is looking for. Now, this good, not great data consisted of non-farm payrolls, which missed at 156,000, the unemployment rate at 4.4%, which is a really good rate, U6 at 8.6, but the labor data, again, the hourly work week fell, and the wages didn't grow at all. They were flat and they were expected to be a little higher. So we missed on the component that's most important to the Fed. If wages are stagnant, this is a big problem, and the data shows that wages are not growing, and this again is a huge problem for the Fed as they look to normalize the balance sheet and potentially raise rates again. Now, you heard a little bit of a dovish statement out of Janet Yellen at Jackson Hole. That was a while back. We've got a Fed meeting coming up in September, and again, CME Fed Watch tool doesn't have that priced anywhere near like there's going to be a rate hike in it. Now, we also had Michigan sentiment today. It came out at 96.7, highest since January. It was only expected at 94 and came in at 93.4 in July. Now, that August number, when you take the cumulative 8 months, this is the highest that the Michigan sentiment has read for the cumulative 8 months of any year since 2000. So for 17 years, we haven't had a higher cumulative consumer sentiment, according to the University of Michigan. Now, you would think, based on that, we'd see stocks even higher than we did today. Again, holiday weekend, though, light trading, Labor Day weekend. So it makes sense. Again, I think it's a pretty good performance that we were up between 0.25% and not just completely flat and quiet. This is Bob Iaccino talking S&P futures from the CME Group trading floor in Chicago.